Hello, everyone. Welcome to the New York Tech Meetup for May. I just want to make sure everyone can hear me and see my screen. Can you give me a thumbs up? Can you hit the emoji at the bottom? Excellent, excellent. Let me share my screen here. I'm Doug Bennett, your host for this evening. I'm acting director of the New York Tech Alliance. And with us tonight is Neel Ganu, co-founder and CEO of Finch, and Dion Gums, founder and CEO of Gen Equity, both who are with the Mastercard Startpath program. But before we get into the program, I just want to share a few announcements. First, for any of you who are unfamiliar with the Tech Alliance, we're a nonprofit organization serving individuals and businesses in the tech ecosystem here. And at the heart of our mission is driving access, equity, and inclusion in the New York tech community to make it the most diverse and dynamic in the world. To learn more, you can go to nighttech.org. We do record our events to share the experience with those unable to attend. Recordings are posted on the Alliance's YouTube channel and shared through our digital channels. Big thank you to our sponsors from Bank of America all the way over to Xander. Without them, we couldn't do our programming. They make everything we do possible. So big shout out to them. A little bit about our next events on May 19 at 11:30 a.m. Eastern. We have our VC update, the current market and its impact on valuation in deal terms. On May 25, 12 noon Eastern time, we have our next New York Tech Talk with a spotlight on a female founder. And to learn more and register, you can go to nighttech.org/our_events. And for anybody who's looking to give back to the community, we've partnered with iMentor, who is in the process of hiring 1,500 mentors by this fall. They're going to be conducting virtual info sessions throughout the summer, beginning May 26, then again June 23rd, July 21, August 25. And anybody interested in learning more about the program, you can feel free to sign up for one of these and learn more. That would be greatly appreciated. If you're planning your own event, you're empowered. You can go to our website at nighttech.org/events, where you can actually add your own event and post it and share it with the community. And to view other events we've produced in the past, you can subscribe to our YouTube channel. There's over 220 videos. They include our meetups, our forum talks, our tech talks, and you might find them quite interesting and helpful to anything you're trying to do. Ways to support the Alliance. We'd love to receive donations from you. You can add a donation when you RSVP to one of our virtual events, become an individual supporting or corporate member of New York Tech Alliance, or simply make a small donation. You can do that by going to nighttech.org/support_NYTA. And our ask of you this evening, you can use the Q&A area of AirMeet to post your questions for our demoers. We typically focus on the technology of the demoers and stay away from business revenue models and such. So this is purely about the technology and the market opportunity they're addressing. It's nice to be attentive and present, and certainly be kind and respectful. Pardon me. A big thanks to Xander, who actually makes this possible, makes using AirMeet possible, and they're a big supporter of ours. They're always looking to hire talent within the company. Anybody interested in connecting with them, feel free to reach out to me at doug@nitech.org. Happy to make an intro for you. And with that, I'd like to introduce our first demoer, Neel Ganu. I'm going to stop sharing my screen. And let's see. I am going to bear with me. There we go. Thanks, Dion. Neel, feel free to jump in here and welcome. Tell us about Finch, what you're doing, and what's going on with your company.
Fantastic. Well, thank you so much, Doug. It's really great to be here. I know we've got a nice group of 15, so great to meet you all. Look forward to chatting with you. Feel free to connect with me. I'm Neel. I am the co-founder and CEO of Finch. By way of background, just on me, I am from Australia. You could probably tell that from my accent. I got started working for really big banks all across Asia, and I figured out that, look, hey, banks have been built the same way for about 500 years. Not a lot has changed. In 2016, ended up moving to Boston to go to business school. Went to Sloan and just tripled down on fintech. Like I love fintech. I'd spent all of this time in fintech, and I actually ended up being the first employee at a challenger bank, which is one of the newer digital banks in New York. I was the first employee in the US. Learned how to build a bank. After that, I actually tried to buy a bank with a professor. And after that, I was actually invited to write a business school case study about banking. So all of these experiences have, really put me at a unique, a unique position. I've really been standing at the curtain, seeing what happens from a customer standpoint, from all of the innovation that's out there, and behind the curtain with, how it's actually created with all of the legacy systems and the rest. So that's my story. My co-founder, Maya, she's a very different background to me. She is, definitely one of the superpowers of our team. She has a background in professional services and consulting and strategy. But the way she looked at it, she was the go-to person for all of our peer group back in the day of like, hey, how should I manage my money? How should I be thinking about it? And, her insight there was, look, if there's all of these really smart people who are asking the same questions, what hope is there for the rest of us? And she's really taken this passion of helping people with their money out into the world. And now she is actually one of the top 15 personal finance influencers in the US. So please follow her on TikTok. I'll share all of the handles in the chat later. But love to tell you more about Finch, and really honored to be here and really glad to be here. So more about Finch. Finch is a brand new kind of rewards card. Finch helps you invest and build credit as you spend. You've never actually seen anything like this before. We are completely different to any of the other fintech products out there in the sense that we don't need you to switch accounts. You can actually add the benefits of Finch to your existing checking account. We layer on top of what you have today, let you access it. And by doing that, we make it super simple to start investing and building credit. The problem that we're solving is actually, massive. Millennials, are absolutely not supported to invest or build credit. And if you look at this over their lifetimes, this is costing us millions and millions and millions of dollars, right? And you think about the situation, like, how bad is it? How has it evolved? But the stats are actually really shocking, right? So 57% of millennials are not investing in any sense today. This is in the US. And, if you look at why, a lot of them find it complex. A lot of them find it complicated. They haven't taken those steps initially to start. But this is really startling. And the thing that's even more surprising is with all of the fintech options that are out there in the world today, you'd think that this number has significantly changed over the last 20 years. But the reality is it hasn't. It hasn't. This number's been flat. Even for the last 20 years, it's, kind of oscillated between 60%, 57%, a little bit over and under. And whatever is out there today is really not moving the needle. And there is absolutely a need for that needle to be moved, right? this is just, when you think about building wealth comes down to both investing and building credit, because it's such a big part of many people's financial lives. And on the credit side, the story is just as bleak. I mean, 43% of folks, millennials in the US, have subprime credit. And this is getting worse and worse as the years go on. And, this is all part of facing the worst economic odds in history. I saw this crazy stat, something like, credit card debt has increased 40% since the start of the pandemic. And credit scores have a massive impact on people and, how their lives are structured, how they, fall into debt traps, or how they get locked into certain mortgages. And the systems and products and everything else that's out there today don't really help them and give them that structure, right? And the impact of this is massive, right? I mean, this literally, if you start building wealth, if you start investing in an early age, this is the difference between retiring comfortably at the age of 55 and living a full and complete life and enjoying all of the things that you would like to, or working tirelessly at the age of 70 with your golden years nowhere in sight. And at Finch, we have a clear mission, and the insight that we have around the problem that we're solving is, in this day and age, people have been given those tools to really, hey, this is how start trading. These are tools where you can start investing in crypto. However, providing the tools without the knowledge or the right incentives on how to use them doesn't create behavior change, right? And behavior change is really, really difficult. It's something that, different industries are tackling in different ways. But the magic trifecta is really by aligning, creating the right product, delivering and empowering people with the right level of knowledge on how to use that, as well as the right incentives. That's when magic is created. And that's what we are putting together. So our vision is very clear. Our vision is to close the generational wealth gap. And that's why we created Finch. Finch lets you invest and build credit as you spend. We actually tap into existing consumer behaviors. All you need to do is tap into existing consumer behaviors. And by doing that, we actually deliver massive benefits back to customers. So when you spend, it's 5% cash back. The rewards are not paid in complicated points or miles or things that are going to expire. They're actually auto-invested to help your money grow. And at the end of the month, we help you build credit without debt. And all of this is with no hidden fees, no APRs, no credit checks, to really make Finch a product that is accessible, equally accessible, and available to everyone. So let me talk to you a little bit more. I know the NYTA session is focused on technology. So let me tell you a little bit more about the technology and how we work and the value that delivers to consumers. And as always, feel free to drop your questions in the chat, and I'll be happy to answer those. So, to get started, the way that we make it so simple is there's actually no switching required. You can actually link Finch to your existing checking account, as you can see here, right? So you keep your existing Chase account, and all you have to do is actually link your primary checking account with Finch. So when it comes to the technology, we use Plaid. I'm sure if some of you have seen the fintech solutions that are out there, this is pretty commonplace these days, but all you need to do is log in with your bank account details, and you can actually link the two accounts. And technology has come to a point today where there is actually a ton of visibility between what transactions are happening in each account. So we effectively wrap around that account. So it's not like opening a new checking account where you need to transfer all of your money across, all of your direct deposits across, all of your bills. This is really simple. You just link Finch and we make it simple. From there, we send you a Finch rewards card, which I have here. We send you the Finch rewards card, and you can start spending immediately. When you spend, we actually spot you and pay ourselves back from your linked Chase account. So let's say you go to Starbucks and you say, hey, I want to buy a latte. We spot you for the $4.80, and we pull that back from your linked checking account to make it really, really simple for you, right? And this is when all of the benefits come in. All you need to do is just change your behavior from what you're spending with. So instead of your debit card, start spending with your Finch rewards card. Same behavior of spending. There's no need to start investing. There's no need to start building credit. We do it all for you. So when you spend, you actually earn up to 5% cash back on all purchases. The cash back is paid immediately. It's something that we give back to customers. We're trying to give back as much value as possible, and this puts us at the top of the market when it comes to rewards card. It's very easy to understand. It's not paid in complex points. It's not paid in miles. It's something you can really truly benefit from, right? And then we invest that. We actually automatically invest that cash back into a personalized portfolio of stocks, bonds, and cash. We want people to start getting invested, with a foundational, traditional, diversified approach. We've found that there's a lot of folks speculating on crypto, speculating on different platforms. We just want to get people started in, the responsible way, which is tried and tested. And, as demand changes and more people ask for different assets, we can absolutely do so. And this is how we get you started. So you go buy, a sweater at Macy's for $100, that $5 that you earn on those rewards are automatically deposited into your portfolio, and they help your money grow. If you want to deposit more, absolutely, we let you do that. And we actually learn from what's happening in your linked checking account. So we would say, hey, Doug, it looks like you have 40% too much cash sitting idle in that checking account that you've linked with us. Maybe you can start depositing, $250 a month. And this is the massive difference that it makes for you. So we determine what you need to keep in cash, and we really help you auto invest the rest to make sure that your money is working for you at all times. And then finally, at the end of the month, we take all of your spending and we actually report that back to credit bureaus. And we really help you build credit without debt. So in the US, credit is something that has been broken for a long time. It's based on something called the FICO score, which is one of the companies that created the credit score, and it's made up of positive payment histories. It's made up of, how much of your outstanding credit or loans that you have open, as well as the age of accounts and a range of other factors. So we directly impact 35% of your credit score just by using Finch, which is incredible. Everyone talks about the difference this makes, which I'll get to in a second, but this is really impactful for customers. So the value proposition is really simple. Link your account, start spending with Finch, 5% cash back. It's automatically invested. Plus, at the end of the month, we help your credit score increase. And this makes a massive difference for people. By using Finch alone, Finch drives over $1 million of wealth for customers over their lifetime. Right, and this doesn't include the hundreds of thousands of dollars that we actually save people from improved credit scores. Everyone automatically assumes that lower credit scores or customers with lower credit scores or people with lower credit scores are the only ones who can benefit from credit improvement. However, it really happens all along the scale. Even a 50-point credit score improvement could mean the difference of tens of thousands of dollars at a higher credit score. For your next mortgage, for your next car loan, for whatever that might be. So we really help you build wealth in a seamless way with the existing behaviors that we have. From a company standpoint, we're based in New York. There's 3 of us here. There's 5 of us in the US and 17 of us globally. Unfortunately, I just saw one of the questions coming. This is a US product first, but definitely something that can be useful and taken globally. We're building a waitlist. The waitlist is growing really quickly. We've got some awesome demand. We've got about 30,000 people waiting to get their hands on Finch, and the waitlist is growing at about 20% week on week. I would love to get you started and get you on. So easiest way, either take a picture of the QR code that we have here, sign up at rewards.finchmoney.com, drop me an email. Happy to get your feedback. Happy to get you to check Finch out, and would love any support in the New York community of helping our company grow and really helping us achieve our vision of closing the generational wealth gap. So, Doug, appreciate the opportunity. I'd love to take everyone's questions.
That was great, Neel. Thank you so much. Wow. So let's see. You've answered Vitor's question from Vitor, by the way, joins us from Sao Paulo, Brazil. And if I understood you correctly, you're going to eventually expand this globally, but right now it's for the US only?
That's right. That's right. I mean, look, the Finch proposition is something that works all around the world. Different countries have different approaches to credit cards and even investments and credit. We play in a incredibly regulated space. So we're going country by country. And as we go country by country, we will, eventually expand, but definitely, getting our first sense of product market fit in the US, where we've got some awesome feedback and really strong response. So we want to take it from there.
So we've got a question about data privacy. How do you handle data privacy and data sharing issues, especially in the EU?
Yeah, great question. There are, a lot of the regulations are emerging, and Europe is really leading this when it comes to things like GDPR and when it comes to, other regulations around privacy. And look, as a software company, which we are, but still heavily involved in money movements in investments. From a regulatory standpoint, we are a SEC registered investment advisor, and when it comes to privacy, we do not collect. I mean, we collect it, but we do not store any PII, so personally identifiable information. And we actually use vendors to really encrypt this and send that across, to our vendors who are the regulated entities and hold that. And, this is something that we will definitely keep having our focus on as we, grow larger, because what we're building is kind of jurisdiction by jurisdiction. We currently work with the US, US requirements. And then as we would expand, obviously these things would definitely come into play. So best of class security based here in the US. I mean, we're built on AWS and we use the most secure approaches to transferring information between our iOS app, our backend, as well as our vendors.
Awesome. So we've got one. I'm not old enough to have credit yet. Can I use it with a debit card? Is it useless if it's not a credit card?
Fantastic question. We want people to start investing when they're 18 and one day, right? So earlier the better. You get all of those benefits of compounding. If you are over 18, fantastic. You can have Finch. The way that regulations are structured in the US is that, if you are under 18, your account is technically joint with a parent or a guardian, right? So while we don't have joint accounts today, we don't have, youth accounts or minor accounts. We will in the future. But for now, if you're 18, you definitely qualify. The beautiful thing is, unlike other credit cards, you actually don't need established credit in order to apply. We don't have credit checks. We don't do a hard or soft pull. In fact, even when you spend your money, you actually use the Finch card. It's technically a credit card, but you're spending your own money that you have in your linked account. So we never really let you get into debt, or we never let you spend more than you actually have.
I had a question around that, around how early do you intervene in to affect behavior? And so are you developing a program or content for parents who can work with their kids to manage money, effectively?
We will be. Right now, what we're doing is we're creating short form video content, which really speaks to our target demographic. So starting with millennials and Gen Z, that's exactly who we target. It's where our early adopters are coming from. A lot of these folks live on TikTok, which is where our biggest audience is. While we do have blogs, we've got a pretty solid repository of investing information on that side. Maya, my co-founder, I'll share her handle in the chat, but she's built this massive following of 370,000 folks, and it's exactly with that. It's exactly with, should I be using a debit card or a credit card? How, what is a Roth IRA? How do I start investing? Should I open a brokerage account? All of these kind of, beginner steps of finance to really help people and add value to them. One of the insights that we've had, and, it really comes down to the fact that, for a lot of the population, and this is regardless of what country you're in, this is everywhere, talking about money is usually a taboo, right? And it shouldn't be. It should be something that's really spoken about. And one of the biggest reasons is people get a little older. I'm still talking about in your 20s, but your 20s and your 30s, why people aren't asking these questions is because they feel that they're expected to know these things. It's not taught in schools, but there's this expectation that you know, and people feel silly or ashamed that they're asking these questions, which is absolutely wrong. So we try to give that back in the simplest way possible to really empower people, inform them. There is, you hear me say this a million times, there's no such thing as a silly question. It's really used to inform you. If you don't understand, speak up. And the more that happens, the better the world will be. And we can have everyone on the journey, have them investing and building credit from a young age.
Good deal. We've got one. Could this be an alternative to people looking for a secured credit card?
100%, right? I mean, I'm an immigrant. When I first moved to the US, I was only able to sign up for the credit union that was linked to my university. No one else would, let me open an account, and I had to have a secured card. So you can actually think of Finch as a secured card, but the security, you don't need to make a deposit. It's actually your linked checking account, right? So it's a decoupled secured card is one of the ways to think about it. And you can actually use this to start building up your credit in that fashion as well. So for that use case, yeah, absolutely, we work, and it also helps you invest along the way as well.
Got it. Thanks. How is this different from Stash, which sounds similar? Will there be extra fees?
No, there won't be. So we do have a subscription fee, so I'm happy to talk about that. Stash is really interesting. I know one of the old founders, but
and I had a question about Acorns. Is this
I will answer those two together. So look, Stash is really designed to help you set up a recurring amount that you invest. That's how they started. Stash away money to really help it grow, and then they've really developed their investing options, and they really give you that, and they charge a subscription for it, right? So definitely value proposition is resonating. They've had awesome growth, and all power to them on that side. How we're different is we still believe that requires a behavior change. We still believe that actually requires you to go in, install the app, and actually set up a recurring payment to come out of your linked checking account, which has friction. You may need the money, so on and so forth. With Finch, you actually just link Finch to your existing account, and instead of spending on your debit card or spending on another credit card, you just flip where you need to spend, which is just the same behavior. You don't need to add a new behavior if you're investing. And you get all of those benefits that Stash has. Plus, we give you, the ability to build credit as well. So that's really the comparison to Stash. Acorns, I love that, Doug, that you mentioned that. A lot of customers compare us to Acorns, but why they love us is that while Acorns rounds up and invests your money, we actually give you 5% to round, to invest. And 99% of the time when you're out looking at prices, I mean, most things are priced pretty close to $1. It's like, $4.99, $2.99. Right. So you're investing a cent at a time. It's not that meaningful. Whereas, 5% of the purchase is actually, can add up to quite a lot. And we really help move the needle more. So it's free money to invest. It's done working for you. And then compared to both Stash and Acorns, we actually look into your main accounts and make recommendations of what we think you can invest. And the beauty is, the way that we have built the system, you can actually have access to your money instantly. So you don't need to wait. There's no extra fees. We've got 2 subscriptions. So the 2 subscriptions are going to be, it's $5 a month for 1.5% unlimited cashback. And it's $15 a month for 5% cashback for the first $500 of spending a month. And then it's 2% for everything after that. So if you look at the best rewards cards out there, 2% cashback is probably, the upper limit of what you're looking at. So we definitely go above and beyond that. Pricing is way less, and the beauty is even some of these, higher reward cards that are out there, you still need pretty solid credit to qualify for them in the very first place. So, by letting you get on without any credit checks, without any of that, we just give people access. And this is truly something everyone can equally access from and benefit from as well.
We've got one here. All of my accounts are joint with my spouse. Am I eligible?
So the beauty is both of you would be able to open up a separate Finch account and link it to the same joint checking account. So yes, It works while there would be different spending accounts. They would both be linked to the same account, which will work.
Good deal. Well, I wanted to come back to behavior. You talked a little bit about that earlier, and I'm curious, what's the most difficult behavior to modify? And there's a naturalness that happens with this, right? Where once you sign up, things automatically happen. And so I'm wondering if you could just speak to that behavioral aspect of things.
Yeah, I mean, look, behavior is core in how you think about, consumer products, right? My co-founder is really big on this, and as we were talking about it, we launched a product earlier in 2021. It was a separate checking account that earned investment returns. And one of the biggest challenges that we had, and Doug, this answers your question directly, like what is the hardest behavior to change? It's really difficult to get people to move checking account relationships, right? Now, everyone here may have heard some of these new challenge banks. I used to work for one, right? It's really difficult for them to come in and, Doug, I can ask you this question now, like who do you use, if you're able to disclose, as your checking account here in Neel?
I'm with Chase.
Chase. And how long have you had that account?
But don't tell of our Bank of America. I haven't disclosed that yet. I'm sorry, say that again.
How long have you had that Chase account for? I'm assuming it'll be a very long time.
A year, 10, 12 years, maybe.
Right. And there is the answer. And this answer is, it resonates hopefully with a lot of you on the call. If it doesn't, please email me. Like, I haven't heard someone who hasn't had that. But if you look at the stats, 98% of assets sit with traditional banks in the US, right? Traditional checking accounts. And the newer banks that are out there, the Chimes, the Varos, the Moneylines, the Daves of the world, they've attracted, quite a small set of assets. The hardest thing to do is really to switch accounts. Our insight and our unique approach is, look, we realized we actually don't need to be the primary account. Just by layering on top of it, using the same technology that we had, right? So getting back to the, what is the goal of the session from an NYTA perspective of actually talking about the technology? The real technology that we had was to stitch together a checking account and a brokerage account. And as we learned that getting people to switch checking accounts is really difficult, what we did was we applied that same technology to stitch these accounts together to actually stitch your Chase account with Finch to make the process seamless. So hardest thing was getting people to switch. By layering on top of it and integrating, we cut friction, we cut our cost of acquisition by 3 times, and that's what makes Finch an absolute game changer.
Got it. Great. Let's see if there's no other questions. I think we'll end with, you addressed this a little bit earlier, but I'd like you to repeat your ask to the community. What do you need help with?
The way I need help is actually in 2 key ways. So the very first is we are growing. I would absolutely love for all of you to try out Finch. Rewards.finchmoney.com. Please drop your name on the wait list. I'll share my details in here. Drop me a line. Would love to get you early access and really test it out yourself. We'd love that feedback, especially as we're growing and we're getting closer and closer to product market fit, which would be incredible. The second ask that I have, as a New York tech meetup, we are always on the lookout for incredible talent, and I'm sure all of you come with incredibly interesting and different and diverse backgrounds. If you are looking for a job or looking for your next opportunity and you happen to be an engineer, a marketer, or a product person, which I think covers a lot, please reach out to me. I would love to chat, especially as we get through this next stage of growth.
Two items. So first, remind me why there's a wait list.
We haven't launched yet. So we actually launched the product. It's launched internally. We actually launched the product later this year. So we're getting people onto a wait list. Seed stage company. And as we get through the next few months, we'll start rolling people in.
Okay. And can you drop that website or that link into the chat as along with your contact info so everybody can have access to that?
Absolutely.
That'd be awesome.
Absolutely.
Okay.
There you go.
Rewards.finchmoney.com. Okay. And Neel at finchmoney.com. Wonderful.
Perfect.
Neel, thank you so much. That was fantastic. And who doesn't want to supercharge their checking account? I know I do. Listen, thanks. Thanks for being with us. And we're going to excuse you for the moment and bring on Dion.
Thank you, everyone. Thanks, Ed.
Thanks. Hey, Dion.
Hey, can everyone hear me okay? I know I've been having some technical difficulties today, but...
thumbs up, everybody, if you can hear Dion okay.
Perfect.
Yeah, we got 1, 2, 3. All right, we got several thumbs
Good
up.
enough.
Pretty good. Okay.
You've got a quorum. That's fantastic.
Okay. I'm going to drop myself out here.
Yeah, great. So thank you. This is such an honor to be here with a nice intimate group. My name is Dion Gums. I'm a Brooklyn girl, first generation, now living in the Midwest. So I'm currently in the Minneapolis area where we've been for about 5 years. The company that I founded after about 20 years in finance, very similar to Neel, on the institutional side as well as on the wealth management side, is called Gen Equity. The original thing that we were really focused on was business ownership. So whereas Neel's product is really focused on the end consumer that we absolutely need, we focus on the business owner side. So our name, actually, when I started and founded the company, was really built and anchored in how do we create generational wealth, right, and bridge some of those gaps for all of the millions of Americans and those around the globe that are looking to start and build and grow great companies, recognizing that, of course, the sources of wealth and of wealth creation, of course, business ownership, home ownership, and the like, as Neel adequately mentioned. I will run through quickly kind of where we are as a firm. I'll have a few slides and just talk a bit about where we're going. So bear with me while I share my screens. Okay, so good. The way we really think about the financial administration and management is really this kind of treasure trove of data that we know small businesses are sitting on, based on the last couple of years in particular. I founded the company 4 years ago, and the thinking behind Gen Equity at the time was really through personal experience. After 20 years, this is my second company. The first company that we tried to start, a business school colleague of mine and we were building Betterment before it was Betterment, but for female investors, right? So we're really looking at the massive growth of wealth creation for the female consumer. And we were saying, well, there's certain patterns that just make women as investors different. And this was probably about 2013. And ultimately, we ran out of money trying to build that platform because, while we had built a fantastic following and a great product, we really couldn't raise enough capital to get off the ground. And so the original thinking behind Gen Equity was really about unlocking capital for, companies and ideas that were underrepresented. What we ultimately have morphed into, particularly in the last 3 years, is a firm, through market research, hundreds of calls around the country talking to business owners, is the source of data and information that one has access to is very, very, very complex. And I know Neel talked about it. Banking has not changed in the last hundreds of years, now being forced to, but it does give us an opportunity to create products for the end consumer, those small and medium-sized businesses, and also enable banks, right, those traditional institutions, to do a better job. And we're able to really think about that on one platform, right? So this is what we're here to do: use technology, use data, really to remove some of those barriers and friction points that exist specifically in business banking and financial management, and give more business owners specifically access to building meaningful wealth and creating impact in the economies that they sit in. So our target profile and this persona has really come up after a culmination of dealing with and talking to a few different kinds of people. What we noticed was, business owners tend to have multiple bank accounts for various reasons. The account that you start out with, might not be the business bank account that you grow with, might not be the business bank account that allows you to get your first working capital loan, etc. And what that does is it creates a desperate portions of information and siloed data that ultimately companies don't have access to. And if they do, what they're really faced with are things that are very siloed, and it becomes very difficult for a time constrained growing business to access the information that they need to make some of the critical decisions in order to help them build and grow. You want to be thinking as a business owner about what your clients are doing, who's profitable and who isn't, what kind of cash is coming in, what kind of cash is coming out, where are the expenses, how many subscriptions do you have, do you really need them, right? What are your employees doing on a day-to-day basis? How are you spend management? Unfortunately, the apps that are out there today, right, which we all know some of these names, are continue to be very siloed. So you have lending apps, you've got accounting apps, you've got banking, you've got payments, you've got expense management, none of which talk to one another, right? And we looked at the market and we talked to business owners, and of course, through the past my 20 years of experience, what we really realized is, again, and I think Neel really harped on this, the individual consumer is able to do some of these a bit easier due to open banking, but small businesses and medium-sized businesses are not able to do that as seamless. And so what we've done is we've created kind of one single source of truth, right? So going back to the technology, one point of access. So if you imagine all of those different data points, right? The financial footprint of a business that sits in various applications, pushed through our unique AI-driven data engine to then spit out products that some of which we will own, right? Automated bookkeeping and tax, right? Tax time has just passed for many of us. Business tax time, if you're in the US, is coming up again in October, right? Streamlined access to capital that's informed by what your business is doing real time, which is very important if you're a seasonal business. Payment automation, how do I get paid faster? How do I pay people faster? How do I match invoices? The chase that tends to happen, all done through one automated platform. And then, of course, what we really think is our differentiator, that secret sauce that makes us very different than some of the others in the market, is kind of this real-time data and analytics. So that's the component that we own. Of course, ultimately, through talking to some of our financial providers, I know that Doug mentioned we were in Startpath. What we found is there's an enterprise version and need for this as well. So some of those same banks, how can we sit in enablement through our data, through our technology, through our algorithms to allow them to do a better job with some of the clients that frankly they just miss, right? There's only but so many bankers you can hire in a branch, even if it's remotely. And so that's kind of the challenge that we've been really, really working on. The first product that we've launched is really an intelligent CFO. So we looked across the landscape, and what we really found was, even if you have QuickBooks, even if you have FreshBooks, even if you have Wave, a lot of the newer technologies on the accounting side, even if you have a CPA and a bookkeeper, it doesn't mean that you still understand and can capture everything across all accounts and all of your multiple points of data. Most businesses don't do that. And so we've been enabling them to do that through what we're building, right? So imagine if you had a CFO that was as smart as they can be, watching, thinking about your business 24 hours a day, right? That's what this first application is. That's what we're here to do. And it's been really interesting to see. We've come up with a unique health dashboard and our own proprietary business health score that is somewhat similar to what you would find in a business credit score, but we've widened the platform because we're looking at your company, not just a moment in time, but across every bit of financial data that you have. So very, very, it's like a credit score for a business, but on steroids to some extent. And so that's one of the things that we're doing through this application. The contextual insights that we're able to do. So not just telling you, hey, you've spent $100 on gas this month, but really digging down to telling you, which is unique, not there in the market, but where are the different inputs and levers that you can pull to really change how your business is going real time, right? Not you've closed your books and what do you do next month, but something you can do by just looking at your phone real time. And of course, I then mentioned, all of your bank accounts, all of your accounting, all in one place, and the streamlining of financial administration. It is really unique and something that is usually offered upmarket if you're a $50 million company. But if you're a 3 to 5 to 10 to even a $250,000 company, you just don't have access to something like this. Here's our team. So again, I mentioned, I'm the CEO and founder. Been working on this concept with Steven, who is our CTO for the last 2 years in its new version. And of course, we have a team of mobile developers and marketing, both here and in the US. I'm here and abroad. We've been growing quickly, very similar to Neel. We recently launched with our mobile application, and the way we are seeing ourselves grow is by partnering with other local and community banks as we move forward. So that's kind of who we are, what we're doing. Just excited to see where we think the SME market in particular can grow. And of course, really trying to do our best to meet the needs that are frankly out there, right? So just excited. If you're a business owner, we'd love to continue to talk to you. We like real-time feedback on what we're building as well. So thank you.
Thanks, Jen. I'm getting a little feedback here. Okay, here we go. Good deals. Let's see if we don't have any questions yet, but I'll jump in. I'm going to go back to the genesis of this, and what was the catalyst that got you to build this in the first place?
Yeah, so it's such an interesting story. So we moved to the Twin Cities about 5 years ago, and I've been trying to build this iteration of Gen Equity, in-house, right? So working for big banks and big corporations for a few years. And, the temperament of the market was, how do we make things faster for the end consumer? But not really thinking when times are good, business banking tends to fall on the back burner, right? So we just come off of a recession, right? So we're coming off 2008. We have companies that have been bailed out, and now we're rolling back into the good times. And we're back to small business banking taking a back seat. And so the genesis was really, well, this is the fastest growing next frontier and next market outside of course, on the consumer side, right? Millennials, Gen Zers, et cetera. But if you think about businesses, these are the contributors to our economy that if things go and fail, right, the world kind of collapses. And then we watch that play out real time, unfortunately, over the last 2 years. So the thinking behind Gen Equity was really, what's the fastest growing, most underserved market around the world, right? Who needs the most help and who can benefit in a very, very different way, not just by making things faster, but who can benefit from, and who do we need to actually grow and scale in a way that when we have economic collapses, which we always do, right? It's cyclical, maybe not to this extent as we had.
Unfortunately.
Yeah, unfortunately, but what we do, who can withstand that without closing as many doors as we've seen closed? And that was really the thinking, right? We've got to start arming businesses that we know can grow and scale with just different kinds of information that we know is there, right? But we need to enable both sides to do just that.
Right. And so right now, is there a sector of industry that is using this where you gaining traction more than others?
Yeah, so it's interesting. So professional services, so people that tend to either have an e-commerce site, so those that are already digitally inclined are people that this has really resonated with. And then we've had a subsegment of the market where they have storefronts and restaurant franchises, right? So some of the people that we have been talking to are actually larger restaurant franchisors, where they are saying, when we onboard, for example, a new Dunkin' Donuts owner or a new Pizza Hut owner, right? There's certain things we would like them to be able to do so that they are allowed to be successful. How can we, as Yum brands, for example, use this solution, right, to our franchisees that we know need to grow and scale in a different way. So we've kind of adopted more of a one-to-many model in terms of how we think about our go-to-market, rather than how can we get as many eyeballs as we possibly can.
So am I understanding this correctly? You're going both to the individual business itself to try and connect and use the product, and you're going to banks and accounting firms to recommend this to their clients. Is that fair?
Yeah, that's correct. So we actually have a few, Liberty Tax franchise owners, right, that have started adopting Gen Equity and what the technology is, and pushing it out to their clients, because quite frankly, it makes their job easier around tax time, right? It makes those conversations easier. And so our goal is not to displace. Our goal is really to enhance, right, and supplement some of the great human connection that we all need as we're running our businesses, but to make those things a bit easier. You sit in front of a banker and they're asking you, what are your liquidity ratios? Here's why we can give you the loan. If you know that ahead of time, or if you can see that coming before it happens, that changes the conversation and quite frankly changes the relationship, right? That's stickier banking relationships, right? Those are people that are inherently getting served without having to go to the 10,000 seminars, right? Financial seminars where it goes in one ear, it comes out the other.
Right.
Leave. So we're trying to build that business intelligence through the app for owners, recognizing that there's a need for people that just want to do a better job on the other side.
Got it. And regarding trends, are there of the companies that are using this, do you see any one trend that stands out from another? Any piece of data that they have gleaned that they didn't, they hadn't seen before, that says, "Oh my God, I'm so glad I'm using this"?
Yeah, I mean, we're still in beta, so we're still early and in beta. But one of the things that's kind of that we've been tracking is really, why is this different than if you just had your one account, right, that you would go to. And the advice modules has been very fascinating, right? It's been really interesting for people to say, oh, of course I know, right? If you think about, the business that's around the $2 million or $1 million mark, a lot of times personal and business account tend to blend. But when you have a business need, you can't call your personal bank, right? So understanding where my business is at any point in time, and actually who the big client is and what the risk is in that big client is something that's really come up a lot, right? It's something that intuitively an owner knows. If you're a consulting company, for example, you know that if you've got Target and J&J, one of them goes, things are going to change, but you don't really track how much things can change. So the diversification tool of business model and how to round out and think about profitability has been something that's come up a lot. And of course, like, everyone wants to get paid faster. So, as we continue to build and grow some of those features that will be rolled out in the next 6 months, right? Yeah. Getting paid faster through integrations and things like that, of course, are more important.
Good deal. Let's see. Any other questions from anyone out there? If not, we'll go to the ask offer component. And how can we help you, Dion?
Yeah, of course. I think similar to Neel, we're a growing company, a growing startup. We're obviously always looking for talent, which I think is the name of the game these days. And we're really looking for people that there's a passion for the space behind it. What we found even in our last few hiring cycles is you can come across a great engineer and great developer, but if you don't really have a passion for solving problems as it pertains to businesses, it probably won't be sticky for you. So we love people that want to think about open banking. We love people that want to think about what's on the next frontier for this space in particular, right? We love people that want to rethink not just making things faster, but really what's the data and intelligence that comes out of that to help make decisions better. So that's kind of talent that we continue to look for. And of course, marketing is always the name of the game. We have a few different people that we serve. And so someone with fluidity that can understand what that looks like is always helpful. And, we'll be fundraising in the next month. So we have we're we have gone through our kind of initial round of funding, and we'll be going through another round in about 4 weeks. So we'll be gearing up. I'll be in New York next week as well. So
nice.
Yeah.
Well, our offer to you is, if we can connect you to any of our sponsors or community, we've got, accounting firms, we've got banks, we've got other financial institutions that if it's helpful to connect you or your sales team, biz dev team, we'd be happy to do that.
Wonderful. And that's what I like to hear, Doug. Thank you.
That's what we're all
New Yorkers helping New Yorkers. I love
it. Opening doors and keeping them open.
That's right.
Good deal. All right. Well, that concludes our meetup for this evening. We'll end the session here. Dion and Neel, if you're able to stay and network a little bit afterwards, that's great. If you have to cut out, I understand. Dion, I think maybe you could drop your name in the chat for everyone to have. And if anyone would like to connect with Dion outside of here, you can do so. I'm also going to add my email address in case anybody wants to reach out to me and talk about anything around the Alliance. Feel free to do so. Okay. Thanks, everyone. Thanks for joining us this evening. We really appreciate it and appreciate your support. Have a good evening.